Hey, welcome back everyone. In today's video, let's have a conversation about Enphase and in particular, its continually declining share price. At the start of the year, Enphase was trading at $264.96. From that point until they reported their Q2 earnings, they were trading down negative 16.74% to $220.60. As a result of their Q2 earnings, the very next day they were trading down negative 25.73% to $163.83. Over the next 3 months, they more or less traded sideways up until the Q3 earnings, in which they were trading at $166.80. From that point up until this past Wednesday, they're down yet another 25.76% to $123.84. The reason that we're pausing at that date in particular is that's when Tesla reported their Q3 earnings. And as a result, it gave us our first glimpse in what to actually expect from Q3. To start things off, I'll acknowledge Tesla, we're looking at megawatts deployed. SolarEdge, we're looking at revenue, optimizers shipped, and inverters shipped. And Enphase, we're looking at revenue, microinverters, and megawatts DC. The reason that we're doing that is because that's the data that is available. And I know it's not a perfect one-for-one as far as watching what each company is doing, but it does give us a glimpse as far as the percentage change between quarters. So starting with Tesla reporting on Wednesday, we saw that the megawatts deployed was down around 25.76%. As a result, the overall solar industry took a hit on Thursday, resulting in Enphase being down another 6.41%, or $115.90. The next hit that came was Thursday after hours, when SolarEdge revised what to expect for the Q3 earnings. Previously, they were expecting revenue to be in the range of $880 million to $920 million. For this, we went with the mid-range of just $900 million. And that's going to be revised downward. If we change this to $725 million, it goes from 9.21% to negative 26.86%. Because of this revision, you can probably guess what happened next. The entire solar industry fell yet again, resulting in another negative 14.68% drop for Enphase, down to $98.89. So as you can see, from the start of the year till Friday's close, Enphase went from $264.96 all the way down to $98.89, which is a negative 62.68% decrease in share price. What we can do with that is determine, is this $100 share price range for Enphase, is this still overvalued? Is it undervalued? Is it set to continue to fall? What can we expect next? What we're going to do to determine that is we're going to look into a valuation model. So if you're familiar with how this spreadsheet is set up, feel free to skip ahead a few seconds. I'm just going to give a quick rundown of how everything works together and ultimately a fair valuation is arrived at. From a top-down view, the spreadsheet is broken into 3 distinct parts. The first section is the income statement, balance sheet, and cash flow statement. The second section is like a key performance indicator and calculator section. And the final section is the valuation section, where the share price is ultimately arrived at. So to zoom in one level, it takes all the data that is publicly available. It brings it down to the calculator section below, where we can find an average or a percentage of another metric that is closely tied to the original metric, if that makes sense. From that point, we can kind of see a relationship in the numbers and ultimately anticipate what comes next, finally giving us the availability to populate the forward values. Once we have a good idea of what the forward values are going to be, we can land at what the share price will be at a point of time in the future. It's important to note that there is a column on the right side. It's the multiplier column. We'll zoom in a little bit for this. Every dark gray cell that is in the multiplier column can be manually adjusted and ultimately manipulating the entire spreadsheet. So for example, this one here, this is the value of the IRA credit. Now we have a good idea of what this IRA credit is going to be worth based on what his management has said, but if, for example, you think this is too high and you want to adjust it down to like $20 per microinverter, or you think it's too low, you can also adjust this upward. So this goes for every one of the dark cells on in this particular column. This next one, for example, this is the expected ramp rate for the American facilities. We have the expected rate for the number of microinverters shipped. Obviously, that would relate to revenue. And most of the variables that are in this calculator section as well. So to kind of explain this a little bit clearer, we'll use research and development as a percentage of revenue. So we're going to take the most recent value, which is obviously, that is the formula, is you take research and development and you divide it by the revenue. Ultimately, you can see that this lands us at 8.44%. And if you scroll over to the left, you'll see that the relationship between these numbers is pretty steady around that 8% mark. So what we do here is then we go all the way over to the multiplier column, and we can see that this is an average of the past 14 quarters that are available. So you can see, again, kind of scroll over, we can see that it is the past 14 quarters. So now that that's been explained, we're going to just hop up to the next couple quarters and look at what the company should be trading at. So we have guidance more or less laid out for Q3. And I guess before we get any further, we will kind of hop back to where we were originally. You can see that Tesla was kind of down negative 26%. Solar Edge revised down to around that same range. But you notice that despite Enphase getting slammed yet again for not the original guidance, but then Tesla's guidance, but then Solar Edge's guidance, that you can see that they're more or less within that same range of negative 25%, we'll call it. It's fair to assume, based on Enphase's past, they have a pretty good track record for hitting guidance or at least meeting. So again, all of the black cells, and I only went back as far as 2020, all of the black cells are within guidance, all of the green cells are above guidance, and there are no red cells that fell below guidance. So maybe this is the quarter, maybe this is the anomaly where they fall below guidance, but I think it's a safe bet to assume that Enphase is going to fall within their Q3 guidance. It's important to also mention that I think that this negative 15% from Solar Edge, the negative 15 that Enphase saw because of Solar Edge, I think that's more boding for what to expect from Q4. Things aren't in the best state as far as like the affordability of housing, for example. Like, people can barely afford houses, let alone considering adding solar. I think this is all cyclical, and I'm trying to be optimistic about the future. I think that the solar industry does. It has a huge runway. It's the cost to build solar infrastructure is lower than just maintaining what we currently have. So to say that Enphase is to say that the solar industry is just kind of like, that's it? No. I'm sorry, but no. We have a nuclear reactor in the sky. We maybe take advantage of that. Also, very few moving parts compared to, think of virtually every other type of energy, right? It's got a lot of moving parts, like whether it's hydro or wind, it's just primed to break down. I'm not saying that solar never breaks down, of course. I know that there'll probably be some more pro-oil, not anti-oil or anything. I'm just saying it's a matter of time before we're going to have to pivot from one energy type to the next. And whether it's hydro, wind, solar, nuclear, all the above, there's a lot of room for growth. The future is very energy hungry. So ultimately, what I just want to zoom out with the spreadsheet and show is that if you put all these numbers together, we're just going to hop down to the revenue expectations. The way that these numbers are all plugged in, and again, these are all malleable, so I adjust them as you see fit. But the numbers that I'm putting in ultimately land us around 20% revenue growth year over year. Another couple of parameters that we're going to need to pay attention to is the earnings growth and the free cash flow growth. So you can see that you put all these numbers together, we'd have earnings growing at around 23%, and free cash flow is right around that 20% mark as well. So the reason that we're looking at earnings growth and free cash flow growth is that is what the formulas that arrive at the share price are heavily dependent on. So scrolling back over to the quarter that we're currently at, Q3, what we're going to do is now look into the share prices and see what fair value is at. I'm going to scroll back just a little bit so that you don't quite give it away yet. You can see that the past share prices, these are just the historic values. So this is where the share price was at as the quarter ended. And then going forward, you can see that that's where the share price, quote unquote, should be based on fair valuation. You'll also notice that there are three distinct share prices. The PEG share price is based off earnings. The margin of safety is kind of like the overall growth of the business, including operating cash flow and the book value of the company, revenue, etc. And then the payback price is more based on free cash flow. Now, for this model, I have just all three kind of arriving at an average, but realistically, we should probably be weighing the free cash flow, the payback price, a little bit heavier than the others, because ultimately, in the market of, well, making money, cash flow is king, right? But if you're familiar with these models, it's a lot of levels of conservation kind of baked in. I'd like to be wrong in the beneficial direction, if anything. So if I'm not bullish enough, that's okay. I'd rather be not bullish enough than overly optimistic and lose a bunch of money. So that being said, let's start to get into the forward share prices. So you'll see that this is where Q3 closed at. This is where we're at as of, I'm filming on Sunday, so this is like Friday's share price. So hopefully Monday's looking a little bit better by the time you see this. But you'll notice that we're basically in the range of where the company should be trading based on the forward expectations, based on what I mentioned earlier, the expected growth for the free cash flow and the expected growth for the earnings. Now, if we were to just go ahead until the end of this, I have made some slight adjustments since the last video. The last video, I think that was assuming that they hit their 10 million microinverter capacity per quarter by the end of by the start of 2027. This one, I dialed it back. The reason is that there's some short-term pessimism, and with that, there's probably going to be some short-term trading. I'm expecting Friday, I guess, to be pretty ugly. But I think most of it's baked in, and who knows where the share price goes from here. I've been kind of heckled. I remember saying when it was like 250, 300, I remember saying like it could drop below 200, and there, no way. And I was like, well, no, it could go even lower. In one of my old videos too, I even said like it could go below 100, and like to push back for that. But here we are. So it's not me trying to do a victory lap or anything. That's just saying like that's the importance of understanding what something is worth. If you walk into a store and you see the perfect sweater on display, you love it, it's the best sweater you've ever seen, but it's got a $200 price tag, are you going to buy it still? Or are you going to recognize, hey, this sweater is fabric and thread and some manpower and the delivery. How is it worth $200? You can kind of backtrack that to know what that sweater should be worth. Now, same situation, you walk in, it's the nicest sweater you've seen, it's $50. You can anticipate, well, maybe it costs $35 to make, but then it's going to be, the premium, of course. Is $50 fair value? Then buy it at $50. Is a sweater worth $60 to you? Then buy it for $60. But what I'm doing here is merely assessing what the sweater is worth. And as a result, it told me, the sweater, in this case, Enphase, is around $100. And now that sweater could go on sale, of course. They could be trying to liquidate. I'm kind of talking sweaters too much. You get my point. I think that Enphase is trading at fair value, and I think if you were to hold under the assumption that the market is going to grow at 20% per year on average from here to the end of this is the 3 years out, keep in mind, I think that you're going to have a 71% increase in share price. Now, that could get a lot worse, right? We just saw Tesla this past year at, I think, 105. And I don't remember the PE on that. I think it was like in the 25 range. Like that's kind of crazy, is considering what comes next for Tesla. And the market could do the same thing for Enphase. Like I said before, it wouldn't surprise me if we saw 80. But I think here at 100, I mean, that's what a whole bunch of math is telling me, is that Enphase right now is worth around the $100 mark. Of course, none of this is financial advice. This is just a bunch of math. That's really all it is. Something important to mention as well is Enphase's earnings are on Thursday. This spreadsheet will probably be offline. I think I'll be able to get to it Sunday. It might be offline Sunday and Monday. So if you are trying to take a look at it, do it before Sunday or Monday or after. I'll probably have a follow-up video regarding what comes out from Q3 earnings and kind of more importantly, what to expect for Q4. But I just didn't want to leave that out. And same thing will happen with Rocket Lab. Rocket Lab is, I think, the 8th of next month or so. But all this to say is the spreadsheets do go offline from time to time for a day or two, just so I can update everything. And just want to make sure that nobody's kind of catching them in between updates and then downloading a version that's kind of like down for maintenance. So if you are interested in this pre-earnings version, jump on it. And if you want to wait till after earnings, no problem. It should be an interesting week. So I'm looking forward to it. I'm cautiously optimistic, but I don't know. I don't know. Yeah. Thank you guys for hanging out, and best of luck on this next week. Talk to you soon.